I think the goals, the education, and then therefore your investment direction, determined by having a full knowledge of the risks and rewards with each investment type and what is your tolerance.
There is a new American dream. One that doesn't involve working till you're 65 before you start enjoying life. If you're someone looking for ways to regain control over your time and check off that bucket list now, you're in the right place. We share tips from experts on investing, personal finance, and mindset so that you can finally have the freedom to work less and live more. This is the Freedom Investing Podcast with your host, Chris Toribio.
What's going on, everyone? This is Chris Toribio with the Freedom Investing Podcast, and I'm so happy you're here to join us for another amazing episode. If this is your first time tuning in, welcome to the show. Please make sure to hit that subscribe button so you can stay up to date with our latest episodes. Moving on to today's guest, we have Sandhya Seshadri. Sandhya has invested as a limited partner, key principal, or general partner in 3,000 plus doors totaling $200 million in assets throughout the United States. Sandhya has been a leader in the equities markets for over 20 years and had moved into commercial real estate due to the tax advantages and the ability to uniquely force appreciate each asset. It has become her mission to help other people capitalize on all of the benefits of real estate investing. Sandhya, welcome to the show. Before we dive into it, give us a quick 2-minute rundown of who you are, your background, and where you are in your journey to achieving time freedom.
First, I want to thank you for having me on your podcast. Really appreciate the opportunity. Like most Asian geeks, I started out with a strong math background, got an engineering degree, got into a W-2 job, realized quickly that the business types of folks are making all the decisions. So I went back to school for a part-time MBA. That's where I got all my financial knowledge, joined multiple investor clubs, and started trading actively in the stock market, both options and stocks eventually, when I had a little more money. And then I came to real estate much later in life because I was looking for tax advantages first, and then realized that, commercial real estate in large multifamily, when you scale, gives you the hands-off asset management style rather than the day-to-day tenants, toilet, trash, and termite style of real estate. And so that's what I do, is I do asset management where I lead property managers to executing business plans.
I love that. And you had mentioned something that's really unique here in that, like, you came into commercial real estate a little bit later in life, but you had first started in the equities market, right? You noticed that people who were making the big decisions were in business, and you went back and got your part-time MBA. But then when you graduated, you also started doing stocks, you started trading. Talk to us a little bit about how you educated yourself to get started there, and then how that positioned yourself to get into commercial real estate.
So I actually went to school, right? So MBA taught me, basics of accounting, reading financial statements, etc. While I was also in the corporate world trying to understand as an engineer why certain decisions were being made in terms of businesses, markets, finances, etc. Like, why was one customer chosen, one market chosen, etc. So when I went to MBA school, all of that sort of the puzzles, pieces of the puzzle fit together, because all my classmates also, many of them had a purely business background and no engineering background. So it was a complete mindset shift as to how you look at product pricing and all of the fundamentals of business. And that's what led to also forming investor clubs. And because we are also pitted against each other in class to pick stocks and portfolios, etc. So it was almost like, okay, school led to doing it privately, and then investor clubs. And eventually, especially when it comes to your, little chunks of money that you set aside as your, play money, but it's not really play money, but that's where you take the risks. And I think the first step would be to do it on paper. Like with my children, we started from when they turned double digit, we start trading stocks. And the first part is on paper with stocks that they know and understand. So everybody knows the basics of Apple or Amazon or Target. So stick to businesses and industries that companies that you understand, whose products and, basic fundamentals you understand very clearly. It's not so complex. It's not some trendy stuff that you have no idea what they do. And I think that's the easiest way to get started and trade on paper in an Excel spreadsheet. Watch the stocks. I'm picking these 5 stocks today based on their pricing and what I understand of the company. And I think they will grow by this much percentage by this time frame. And if you do that on papers, eventually you'll get the confidence to do it with real money.
Ooh, I love that. And so you had mentioned something too there, and that you had been part of several investor clubs. Now, we host a monthly meetup here in Chicago called
Mhm.
Windy City REI, and that's a real estate focused investor meetup.
Mhm.
But what do these investor meetups kind of look like for equities? Like, how does that kind of play a role when it comes to managing your own portfolio of stocks?
I think that there's different levels, as you would in any meetup of people. There's the more experienced ones who sort of typically lead it and give us the insights. And then by turns, each of you can go in there. You can even pitch a stock, and then the whole club can decide would we invest in it or not, etc. So you get
Wow.
exposure to something different or something new that you normally wouldn't. Just like I went to a real estate conference that was multifamily based. It's called the Best Ever Conference, and they had a pitch slam where everybody was chosen to come and pitch their deals, and the judges picked like the top six. And funny enough, all of the six had nothing to do with multifamily. It was mobile home parks or self storage and vineyards and things like that. So that's where you get the exposure to a variety of different stocks. In the case of my investor clubs, and you build your knowledge, you form friendships and networks, etc. through that. Same thing that you basically do in your real estate world.
Gotcha. And so we had talked about this briefly before the show, but when you had graduated with your MBA, you did this equities full time, right?
Mhm.
You're managing your
Yes.
own portfolio. So what was kind of the reason for why you transitioned out of your previous corporate job into what you were doing at that time?
The big one was freedom of time. I loved my corporate job, but I had to travel internationally a week at a time easily. I had to go to Israel and Taiwan, Japan, Germany, India, all over the world. And once I had children, I really wanted time at home. I had an infant at home, and it was really hard being away as a mom for that long. I think I could have done 1 or 2 day trips, but when it ended up being such extended trips, and I was pretty high stress environment that I enjoyed prior to having kids, now no longer the priorities changed. And so I was searching more for freedom of time rather than just money. And I
Got
could easily do it after a while, having done already equities trading for a while. It wasn't hard to match my W-2 salary by trading stocks at home just by spending 2 to 3 hours a day, but it's 2 to 3 hours a day you commit to. And I would do it in the mornings before, kids got up kind of schedule. So I had the whole day to spend with them. And so it was like the best of both worlds for me.
Wow, that's fantastic. So you were able to quit your corporate job and do these equities trading while having your newborn child, and that allowed you to get away from the day-to-day responsibilities of traveling to different countries on a regular basis,
Hmm.
allowed you to stay home with your newborn, and on top of that, you consolidated your workday into about 2 to 3 hours each
Hmm.
day while doing
Yeah.
these equities trading.
Yeah.
So I know much of the things that we talk about in this podcast is related to real estate, but that sounds fascinating for someone who's looking to gain more control over their time and over their
Hmm.
schedule. So, when it comes to these equities trading, what would you suggest to someone to get started? I mean, we know with real estate, there's the four components, right? You get your loan pay down, you get appreciation, you get tax benefits, and you get cash flow. But what kind of benefits are there for equities trading, and how does that relate to or compare to real estate? I guess I want to say.
I think the biggest thing in any venture is goals, right? What are your goals, short term and long term? How much of a cash flow do you need? Are you willing to wait for appreciation, etc., right? So there's your buy and hold strategies for stocks that you believe in that, okay, if I bought 100 shares of Amazon today, I don't care that I make money in 3 months with it. It's something I would hold on to even for 10 years, right? Versus I need dividend stock. I need something that pays me a little money because this is going to what's going to fund my vacation or whatever else, right? So have your goals written out very clearly for any investment type, and then get the education, right? So invest only in things that you fully understand, know, and are willing to take the risks. So look at the risk versus rewards, right? Some small cap stocks, the really new trendy stocks might be much more high risk and the payoff might be more versus something like your blue chip stocks, sticking to the S&P 500 or basic index funds, right? They might give you more stability. Then there's the dollar cost averaging, right? That's what people do with their paychecks. Every month they squirrel away a certain percentage of their paycheck into their 401k or into some other investment fund. So then you're not really worried as much about the fluctuations of the stock market, but it's more of a steady investment. So I think the goals, the education, and then therefore your investment direction determined by having a full knowledge of the risks and rewards with each investment type and what is your tolerance.
Very interesting. And so, throughout that time where you were
Mhm.
doing these equities trading, you were
Mhm.
working 2 to 3 hours a day.
Mhm.
What would that kind of look like during those 2 to 3 hours each day? Like, what were you doing to kind of evaluate your portfolio and making your decisions on how to move forward from there?
Well, you've already allocated a certain amount of money in your portfolio, right? So you want to be clear about that. And then you want to readjust as the stocks, let's say one stock more than exceeds your goal for that stock. Like, let's say I only wanted to make 20% on something. I set auto sales so that whether I'm awake or I'm asleep or I'm on vacation, that auto sale happens. So every 90 days, you can set the sale price in your E-Trade account, for example, as a good till cancel for that stock. So then you're not worried about what's actually happening. It's like it's on autopilot on its own. So similarly, I have targets for each of the stocks. Some stocks I don't mind holding on to long term, like I said. So I just buy them and leave them. But then the other stocks, I'm like, okay, this needs to make me this much money in this time frame. So then I set the sale prices for those as well as the buys. So one thing I like to do is I'm a bargain hunter. I came here as an immigrant with 2 suitcases in hand and $8 a week kind of food budget, right? Which is insane. So I always buy things only at a bargain. I never pay full price. So I look for stocks that are close to their 52-week lows. That's a very important criteria for me. So if you look at whether it's your Amazons, Walmarts, any cost stock that you're looking at, I like to find those dips and then buy during those dips. So then I set buys as well at those prices. So that's what I'm analyzing. And of course, you set your list so that you always get alerts whenever your stock reaches that price. And then you can make a decision whether to auto buy at that price or you want to be notified so that you can go and place the, purchase. So those would
Very
be the typical
interesting.
set of activities I do for a couple of hours each day.
And so, for anyone who's interested in learning more about equities trading, what would you suggest to our listeners to get started?
Join investor clubs, get educated, figure out how much money you have available to allocate and your risk tolerance, right? That's the big one. It's almost the same fundamentals when you approach real estate, right? How much money do you have? How much time do you have? What's your education? Where do you need to get more education? Is it through podcasts and books? Is it through your own research of these companies? What companies do you already know? Like for me, I was in the tech sector. I was working in the semiconductor industry. So I already had an inherent knowledge just from being in that industry for a while to know everything about tech stocks. So that's where I started. I didn't venture into, say, medical stocks. I'm sure there was a lot of money to be made in pharmaceuticals and other things, but I didn't have the knowledge or the insights into that field. So start with what you already know and where your strengths are, and then go with common stocks that everybody knows about and, figure out your risk tolerance and think of it as, short-term versus long-term. Am I willing to hold on to the stock for a while? Just
That's a
like
really
real
good
estate.
point that you made there because, you talk about a lot of people when they think about the stock market, the automatic word that comes to their mind is diversifying,
Mhm,
invest in the total US stock market,
mhm,
invest in the S&P
mhm,
500, invest in the total international stock market.
mhm,
But what you did is you actually niched down based off of what it is that you knew. As you said,
mhm,
you were in the tech industry, you were very familiar with that sector.
mhm.
And so majority of your portfolio, it sounds like was centered around that specific industry. And so that's what allowed you to have that competitive advantage because you knew
Mhm.
the ins and outs of what was actually going on in the industry. That's a really interesting insight.
Yeah, there's a lot of volatility too, right? Supply and demand, and you could have a typhoon in Taiwan, and that could like hurt your semiconductor supplies, and those are things beyond your control. So it's a pretty volatile sector to pick. But my knowledge of that sector and my belief in some of those companies helped me with that. But I also bought a lot of general stocks, like I gave you many examples prior. You can always catch the wave of Apple. Just watch Apple. You can always catch the wave. And it's a stock that you don't mind holding on to long term, right? You believe in that company. Disney, you can't go wrong with Target, Disney, Apple, basic companies like that, right? So this is what all of us understand, all of us as consumers use every day. So just go with something that you already fully understand. Then when I had my son and his fascination with trucks and trains and automobiles made me study the transportation sector. So we studied the transportation sector. So his entire portfolio actually is in companies related to transportation versus my daughter, we would walk malls back in the day and she would pick retail stocks. That's how she funded her things like, she had a drum set, she had a marimba, she was a percussionist. So that's a lot of instruments. It's not just one instrument that you spend money on. So I see myself as a parent who takes care of my kids' needs, but all of their wants, they have to do something to fund their wants. If they want something that's in the $500,000 range, they've got to fund it. I would probably give them something that gets them $10 to $20 kind of gift every once in a while. But when it comes to bigger dollars, they need to do something to earn it. And so educating them on the stock market was a pretty good way to do that.
I love that. I love that. And I love how you took into consideration what their interests are and allow them to focus
Hmm.
on those instead of what it is that
Hmm.
you're comfortable with. So that's a really good point there
Right.
too. All right. So transitioning now, you were doing these equities trading for some time. How long did you end up doing it before you ended up jumping into commercial real estate?
Oh, over 20 years. Because, we're all buying stocks whether we like it or not from day one in a W-2, squirreling money away into a 401k, right? So it was a while before I jumped into real estate. And the reason was my lack of knowledge of being a handy person, being able to fix something. So I always assumed real estate to be, single family rentals or fix and flips. And I just didn't have the background to do it. I didn't want to spend the time. And when I analyzed it financially, I had to take on recourse debt, just like buying my primary home. And my margins seemed to be only about 300 or 400 a month. It just didn't seem worth it. I'm like, I could make that money in stocks doing absolutely nothing other than sitting in front of my computer for a little bit, right? So that's why real estate did not make any sense to me until I attended a weekend event by Brad Sumrott that taught me what is multifamily, which is going at a large scale. So you employ third-party property management companies to run all the day-to-day stuff for you, leasing, the tenants, toilets, trash, termites, all of that. They deal with all of that. And I'm an asset manager. So I look at the financials, I come up with a business plan based on the market, the value add proposition in that property. And that's why it made sense. Is at a high level, I'm an asset manager, not a day-to-day property manager.
Gotcha. And so you are the one who kind of executes the business plan, holds the people accountable who are in the day to day, and ensures that
Mhm.
the business plan that you had created actually carries through to fruition. And so
Correct.
when you first got started, you attended this Brad Sumrock event. What did your first step into commercial real estate look like? What role did you play?
So as soon as I attended the weekend event, I jumped in all in. I paid for the full price of the mentoring program. And I had retirement money because I was no longer in corporate. So I invested passively with it, with specific partners who I thought would be really good to have a connection to and in my market. So I live in the Dallas Fort Worth area for the last 32 years. And so this is my market. I wanted to be able to drive to the properties that I invested in. So I already had the local knowledge. I knew the locations. And so I actually drove to the properties with these sponsors. I would offer to help them if anything was going on. Some of them were from out of state, but the deals were in Dallas. That's how I got started as passively. And it took me about 7 months before I had my own deal as a general partner under contract. And even that was a partnership with more experienced sponsors because I didn't want to take on all the risk when I was using other people's money to make a purchase. So I really wanted the experienced partners' insights. And then COVID hit right after we bought that property. So they weren't able to travel quite as much. And so I ended up doing a lot of the asset management. And that's where I got all my confidence is, okay, all this underwriting and things you said on paper came to life. It's true. When I upgraded this unit's interiors, I did get the rent bump that you said we would get. So all of those things on paper came to life in the practical sense. And that's what built my confidence. So now I know, okay, when I do this, this actually works. And so now I'm a general partner in about 8 deals, 2 of which have gone a full cycle. A third one's about to go a full cycle. So, reality, you go through life, you experience these things, and that's where you realize, okay, maybe this works after all.
That is pretty neat how, up until this
Mhm.
time, both with your equities trading as well as taking a look at deals, much of them has actually been on paper, right? You're
Mhm.
evaluating these assets, but you're based off their
Correct.
balance sheets, and then you jump into commercial real estate as an asset manager. You take a look at their financials and build a business plan, things of that sort.
Mhm.
But physically seeing the results of
Mhm.
what that actually looks like in person, that must have been a pretty cool experience.
Was exciting. And I love visiting my properties. I'm there at least 2 or 3 times a week. All my properties are within the 30-minute drive of my house. In fact, when we finish this, I have an appointment in an hour to meet some vendors at my property. So it's pretty exciting when things come to life. And as part of my day-to-day routine, I drive past the properties anyway. So it's very easy for me to check on something real quick on a regular basis. And I think for me, that's what makes it all come together in real estate. It's a very real physical thing you can watch, see, and learn from.
I love that. And so you started out as a limited partner. 7 months later from there, you got your first opportunity to be a general partner in as a partnership with other really experienced operators. And at some point or another, you also became a key principal. So for the sake of our listeners who don't know what a key principal is, can you kind of describe what a key principal's role is when it comes to purchasing these multifamily assets?
Yeah, so I actually became a limited partner, then key principal, and then finally a general partner.
Oh,
So
gotcha.
key principal is a person who actually is like a loan guarantor. They have the liquidity and the net worth, and they help with acquiring the loan. So if you're buying a $10 million deal and the loan amount is, let's say, $7 million, then the net worth of all of the people signing the loan has to equal the amount of that loan. And so what it gave me as a newbie is sort of what I call a Fannie card or a Freddie card, meaning I would have history with those agencies so that when I'm going to sign my own deal as a general partner, I already have that experience. Fannie Mae or Freddie Mac typically doesn't give loans on large multifamily to someone with no experience at all. They want at least one person in the partnership team signing the loan to have prior history with them. So I was trying to get the Fannie card and the Freddie card, if you will, as a key principal and loan guarantor. And I am taking on the risks of the loan, but I'm still not as liable from a limited partner standpoint of having to answer to all the passive investors, because a key principal is still in many cases a passive investor, but signing the loan. So they're not the ones executing the business plan. So it's like an intermediate step is how I'd call it.
Very neat. Okay, so you've had experience with all three of those, and at this point in time, I am curious. I mean, at one point for 20 something years, you were working as a equities trader, and working 2 to 3 hours a week while your children were growing up. Fast forward 20 years, you jumped to the commercial real estate space. What does your day to day kind of look like now?
I still trade stocks. I still set my trades. I still spend, at least an hour or two every other day or so looking at my portfolio. But a lot of it is now in real estate, and I love the asset management side. So I'm physically going to a lot of my properties. It also the priorities shift, right? So when you're trying to work on a new acquisition, there's just a ton of paperwork to deal with your lender, your legal, as well as raising capital. So that kind of takes the forefront. But at the same time, now deals have slowed down a little bit in first quarter. And my focus now is to sell the asset that we have under contract at a good price that's meeting all the IRR that we projected to investors. And then we have various CapEx project in process at all of my properties. So I have 2 days a week when I have all my asset management calls with property management where we go over all of our key metrics. And then I have all the other 3 days as flex days for me to go visit my properties. And so I just do that as and when needed. And then, of course, there's time to support investors. This time of year, there's a lot of time also taken up in terms of getting paperwork done for taxes and K-1s to be issued on time. That's a deadline that's looming for us. So, and then there's always surprises, right? So you always want to allocate time for surprises. We had a big storm about 10 days ago in Texas that caused some damage at one property. So I'm having to be contractors at that property to make sure we get the damage control done quickly. And we lost 2 units to the storm that are down now. So we got to get those back online as soon as possible.
Gotcha. And you had mentioned something about your weekly meetings with your property management companies, and that's tracking your key metrics, right? So that's incredibly important when it comes to any aspect of your business, really, is establishing KPIs so that way you can ensure that you are making forward movement in the direction you want to go to. What are some of the KPIs that you use as an asset manager to track that your property management company are actually doing the things that they're supposed to be doing?
The most important one is always your top line revenue or collections. That's a number that nobody can fudge. And so you want to make sure those targets are very clear to your property manager on site, as well as the management company, regional manager, vice president, etc. The next one is your operating expenses. You want to keep it as a tight ship, so to speak. So below 50%, 40 to 50% is the ideal target once you've stabilized operations. The next one is your net operating income. NOI is the difference between your revenue and your operating expenses. This is a very crucial metric because it's what determines the price of your property if you want to sell it. It's NOI divided by the going cap rate is the value of your property. So you want to make sure that when you do your NOI calculations, that one-time expenses, such as a new appliance, are classified as below the line expenses, so they don't count towards your NOI. Now, your taxes and insurance do count towards your NOI, so you want to make sure on an annual basis you are protesting taxes if your property is in Texas, and for insurance, you want to be getting quotes on a regular basis, like about 60 days prior to the expiry of your current policy. So collections, operating expenses, and NOI, very important. You also want to track your CapEx, meaning your capital expenses. Are they within what you had initially projected, so that your net cash after all of this is positive, right? So you want to make sure the net operating income is enough to cover your mortgage, especially if you're in a floating rate loan debt and your mortgage monthly has increased. You still want to have a DSCR, debt service coverage ratio, of 1.0, meaning your net operating income is enough to pay the mortgage. And if that's not the case, then your deal is in trouble. So you got to do something about it. So that's something important to track. Other basic metrics we always track are occupancy, right? Obviously, when you have rental properties, your occupancy has to be at a certain number. You want to track your rents. You want to make sure there are any trends or patterns happening. Like, okay, there's more 2 bedrooms that are popular versus 1 bedrooms are less popular. You want to watch out for trends like that. So you want to watch those trends. You want to analyze your delinquency. You want to have a plan to address delinquency. So if the delinquency is an issue, then we deep dive into it. If it's not an issue, then we don't have to look at it. I have one property with $5 as delinquency. I also have a property where it's $8,000 as a delinquency, right? So it depends on what is happening at that time at each property that needs to be a deep dive. If occupancy is an issue, then we analyze our marketing budget and we say, where are we spending our money? Where did the last good leads come from, etc. So to some extent, those are the things that you would want to track on a weekly basis with your property management company.
Very interesting. And I know when it comes to tracking these things, you have these weekly meetings with your property managers, but ultimately, what I'm thinking is, like, let's say rents come in, rents are typically due on one day in a month, right?
Mm-hmm.
So during the rest of those other weeks, I guess, what are some of the things that you've experienced so far that changes your operating expenses or even changes your top line revenue, even though rents are technically due on the beginning of the month, let's say?
So rents are typically due by the 4th day of the month, and after that they're late. And you want to make sure your property management company is issuing notices and knocking doors, etc. That's very important. And have a plan. So you want to have a plan of who's promising to pay. If they owe $1,500 and they only pay you a partial pay of $50 so that they don't get evicted, then you should stop accepting those. So you need to know all of those nuances. But what can affect you that's unexpected is if you've just acquired a new property and you were not aware of past claims, etc., your insurance costs could be really high. And so one of the things you want to know is we had wind damage, right? So we're looking at our deductibles to say, okay, what's the cost of my repairs versus my deductible? Is it even worth filing a claim? Because if you file a claim now, then your insurance rate is going to go up again next year. You're going to hold a property for 3 years, or even if you're going to sell it, for the next potential buyer, it's going to cost them too much. So you want to be doing those kind of trade-offs. Rent is definitely collected within the first few days of the month, and that doesn't always happen. So your property manager is still busy. So when I want to visit the property or deep dive into something with a property manager, you want to avoid the first few days of the month. You want to go around mid-month when they're a little less busy to discuss more deeper things and have those personal conversations. Like I like to have lunch with them periodically. I do all of that in the middle of the month.
Very interesting. I was supposed to. It also allows you to see that there's maybe a bump in expenses and utilities for whatever reason, and that could indicate something that could be potentially wrong with the property, a
Correct.
CapEx expense, whether that be a leaky pipe or whether that be a gas leak or whatever that may be too. These are also type of things that it's good to keep track of these metrics so that way you can find these things out very soon.
Absolutely. You want to track your utilities and you want to see if that's related to anything happening with the weather or if it's an actual leak. So we have leak detection systems and we have these low flow toilets in most of our properties. So we have companies like, Save Water Company as an example. They monitor that for us and we send the bills to them on a quarterly basis so that they can give us recommendations, or they'll say, we think there's going to be a problem in this building. This is where there might be a leak. So check that. etc. So they read those things for us. Another thing is, your bill back of utilities, your laundry income. Those are all things that you want to be tracking to make sure the billing and everything is happening correctly. And so you want to plot trends. That's the easiest way to spot things. And so I employ my lovely 15-year-old son to look at my monthly financials, and I say, are you spotting any trends? And so his eyes are really good. So I make him take those data from the Excel spreadsheet and plot them for me. So he's learning how to do plots as well. So we look at the trend and he say, what do you see in this property versus this? And so he plots all 5 different properties on a trend. And I say, okay, what do you think we should be doing here versus here versus here? What's wrong here? And so that's very helpful. It also teaches them basic skills like Excel, etc. So as much as possible, including your family and your business is a great way to help them see what you do and why you do what you do.
That sounds fantastic. And it sounds really fun too. Geez, include me on that one next time. I'd be happy to plot some charts.
Sounds like a plan. That's how you learn, right? That's why you learn. So you can plot just about any metric. So he had spring break and he was bored, and I took him with me to a conference, my son. And, I said, go play with Excel. Show me some neat little plots. What data are you seeing across these properties? And he showed me. So we learned something
That's
both
amazing.
together that way. And so the next thing we're learning together is ChatGPT. What is it? What is this trend? What are some prompts you can do to generate better ideas? Because my son's great at math, but he's not much of a communicator. He doesn't like to write a lot. He doesn't like to read a lot. He'd rather play games. So I said, okay, learn this tool. It's going to be powerful. It's going to help you with a lot of, essay writing in the future days.
Absolutely. A lot of times this chat GPT can do the work for you or can teach you exactly the steps that you need to take in order to do the work appropriately. It's powerful. All right, folks, so we're coming towards the end of today's show, but before we finish, it is time for the Freedom 5. These are 5 questions that we ask every guest in our show, starting with the most important question: what is your why? What is the underlying motivation behind everything it is that you do?
My very selfish motivation is for my family, to provide for my son. He's highly functional autistic. I'd like for him to have an additional stream of income, not have to worry about doing a W-2 job all day, and not having to have that high GPA chasing high school experience of high pressure either. So I want him to learn for the fun and love of learning whatever he learns. And that's my personal why. But the bigger why is, at some point, if I have a large portfolio of rental properties, I'd love to be able to provide a discount to my renters and have a contest and provide maybe 1 free month if you pay all your 11 months on time.
Yep, keeps everybody accountable, keeps people incentivized, and ultimately the people who deliver it keeps them happy and makes them want to stay. So that's a win-win-win situation for everyone. All right, Sandhya, the second question we have here: what book has had the largest influence on your life?
I think the concepts behind Atomic Habits has definitely helped a lot, is because sometimes we get dejected by not seeing instant results. And so don't underestimate the power of consistent daily small steps towards that big goal.
Powerful stuff. Yeah, we read Atomic Habits as well, and it's made a dramatic increase in the efficiency and the productivity in our life too, and I highly recommend that to anyone. Third question we have here: what is the most important thing, whether it's a piece of technology, a habit, or a person, that has helped in freeing up your time?
I think time block. And behind that is, a long time ago, I read the book First Things First by Stephen Covey, and it tells you to focus on the really big things. Imagine a jar and you're trying to fit these large rocks, medium rocks, pebbles, and then sand all into this one large jar. The only way to do it is if you fit the biggest rocks in first. So the same way, you must time block for the most important things each day. Otherwise, you'll just be working on the sand and the little pebbles instead of the big rocks of your life.
Ooh, I love that. Yeah, you're absolutely right. I mean, a lot of people, the first thing they do in the morning is they check their email or they check social media or they do these things just to make them feel like they're busy or accomplishing something. But the reality is the most important, heavy hitting things that'll drive your business forward. Those are the things you should really be focusing on, because you could always play catch up on those other things later. Fourth question we have: what is the number one piece of advice you would give to anyone else looking to achieve more control over their time?
Set goals that are realistic and achievable, and only follow or surround yourself with people who are doing what you want to be doing. Do not take any advice from someone who has not accomplished what you want to accomplish.
Yes, that's very powerful. I mean, there's so many things that go into that, right? I mean, the people, not apart from experience alone, I mean, there are so many different things that can make a person successful at what it is that they're doing and what strives to make you want to be in their shoes, right? I mean, everything from mindset, the network that they have, the experiences that they've accomplished. You compare that to someone who's simply saying, oh, real estate's risky. or something like that. You know,
Exactly.
it's
Like, what have
you
you
don't want to
done?
listen to that.
What have you
Right.
accomplished? Like, when I started in real estate, 90% of the people in my world had never done it. And so they're all like, oh, it sounds scary. It sounds risky. Why are you doing this? And then I met a world of people who were doing this, and they all made it possible.
Absolutely. And the interesting thing too is, you know, and we've seen each other at multiple conferences. It's like there are such a diverse group of people with a diverse group of backgrounds that there's no specific type of thing. You can come from so many
Mhm.
different things and be successful in this industry as long as you surround yourselves with the right people.
That's
You're
right.
absolutely right. I mean, same concept with myself. I mean, I do anesthesia on a regular basis, and like you wouldn't from anyone looking inside, they'd be like, "Oh, anesthesia is extremely
Mhm.
risky," but a lot of this risk is mitigated with
That's
education.
right.
Just like when it comes to your equities
Mhm.
trading, a lot of people see that as extremely risky, but no, as long as you take the time to educate yourself, that education serves as a hedge against the risk that's naturally associated
Mhm.
with any type of thing that you do. All right, Sandhya. And the fifth and final question we have here: what is the best way for our listeners to get in contact with you?
I post a lot on LinkedIn as well as Facebook, and then my website, engineered-capital.com. Engineered Capital is the name of my company. You can find me there. You can find a checklist of it, a sponsorship team, or other resources. And I'm a connector, so I can definitely connect you with someone if you're looking for help in a particular market, a particular sector, etc.
Fantastic. Well, Sandhya, tons of amazing information today. I love how you shared your experience when it came to your 20 years of equities trading and how you got started financially to get yourself positioned to do other things such as investing in commercial real estate. I loved how you described your transition into the multifamily space, both from a limited partner standpoint and as a key principal securing the loan to a general partner and now an asset manager as part of a team of several different assets that is that you manage. And I love how you describe the day-to-day responsibilities of an asset manager and how you keep track of those and keep track of the KPIs and keep yourself accountable as well as your team. I just want to thank you so much for being an amazing guest on our show. And I really look forward to remaining in
Thank you
touch.
so much for the opportunity.
Now, if you like this show and want to learn more about how we can help you free up your time through passive real estate investments, check out www.freedominvesting.com. Make sure to subscribe to our monthly newsletter and schedule an introductory call with our team. We also have a free 7-day course on what passive real estate investing is and how to get started so that you can start your journey towards earning back more time in your life. To all of our amazing listeners here on the Freedom Investing Podcast, my name is Chris Toribio. Till next time.